Yeah, well, I was an undergrad at Stanford in 2014. I dropped out in 2017 and moved to Manhattan and invested in what were called ICOs. And predictably, I did super well while the market was going up, and then it all came crashing down. We thought we were doing something different, but it turns out greed is still greed. I'm not totally like 100%. It must be Bitcoin, but I think that's, obviously by far the most robust of all the assets at this point. There's just an inherent instability in the debt system, and to have a legitimate alternative in Bitcoin, it couldn't have come at a better time. And I think people are waking up to that.
Welcome to Satchats, the Bitcoin podcast, where we chat about sats. Sats are the smallest part of a Bitcoin, the same way pennies are the smallest part of a dollar. With Satchats, we are building the world's biggest Bitcoin welcome center to serve as your gateway to generational wealth. So if you're brand new to Bitcoin, we want to chat about sats with you. Head to satchats.com to grab your slot in the studio today. I'm your host, Stuart, Bitcoin Dad.
And I'm your co-host, Chris, founder and CEO of Ithaca Hummus.
And in the studio today, we have number 100, Dean, the beginning of season 2 of Sat Chats. Dean, welcome to Sat Chats.
Thanks for having me. It's awesome to be here, and to be number 100 is an amazing honor.
So I'm going to start with some rapid-fire questions, okay? You ready? Number 1, Dean, how old are you?
I'm 29.
Where do you live?
Eugene, Oregon, but I'm also pretty nomadic, so that'll change.
What do you do? I was going to say for a living, but it's like, what do you do to mine fiat?
Mine fiat.
What do you do to mine fiat?
Well, I'm selling my book right now, so I'm mining through that. Yep.
Name of the book, just since we're here.
Yep. God Money Lost and Found in the Crypto Wilderness.
Whoa. Okay. That's going to be cool. So we'll jump into that. Last question for you, since you have Bitcoin, what would it mean if someone out there listens to your episode and they get it and they start stacking their first sats? What is that going to do for them?
Well, it'll give them a share in the most robust asset of the last 20 years, really of the last 200. If you think about the rate of growth in the asset category, the virality of it compared with, gold, for example, which took thousands of years to get to the point where Bitcoin's at. And it's really a piece of the future is the way I think of it. And I'm not a Bitcoin maxi either. I know I have a broad portfolio of several crypto assets, which, I think most Bitcoiners, probably do. So, I'm not totally like 100%. It must be Bitcoin, but I think that's, obviously by far the most robust of all the assets at this point. So
we want to hear what it was like for you when you heard about Bitcoin. Where were you when you first heard about Bitcoin?
Yeah, well, I was an undergrad at Stanford in 2014 when I first heard about it. I had a professor, Balaji Srinivasan, who was an early Bitcoiner and a big proponent of it, at the time. And one of his friends, this guy, David Mazieres, who was also one of my professors, created this protocol called Stellar, which is a nonprofit crypto protocol. And I was in an office hours meeting with them and was just kind of listening to them talk about it, talk about blockchain, talk about the power of digital assets. And at the time, I was really kind of upset that I had missed the .com era, right? I felt like there was this huge, wealth creation event that I was just too young to have participated in. And it dawned on me that crypto was my generation's .com, right? This was my opportunity to participate in a massive wealth creation event that was also really helping some of the most vulnerable people in the world get away from corrupt banking systems, take agency over their financial world. Because, Bitcoin, of course, and Stellar as well, were really focused on gaining adoption in Africa, in South America, where, hyperinflation was rampant. And I think that's another thing that, especially in the US, people have a hard time understanding is we have the most robust fiat currency in the world, but most countries do not have a robust fiat system. And so the case for Bitcoin and the case for digital assets is much more obvious in different countries.
What do you think it's going to take for the case for Bitcoin to become more obvious to Americans?
Well, I mean, I think it's becoming more obvious, right? I mean, we've seen, the COVID print, right? Whatever you think of the big beautiful bill, it's a massive increase in the deficit over the next 10 years. The debt to GDP ratio is well above 100% at this point. Just servicing our debt with interest payments is becoming greater than the defense budget, right? So there's just an inherent instability in the debt system, which Satoshi foresaw, right? And that was instantiated in the Genesis block, right, with the Times of London quote that he put in there, which I'm sure you guys have talked about. And so we're starting to realize the shaky foundation on which the debt system is based on, right? And to have a legitimate alternative in Bitcoin is, it couldn't have come at a better time, I think. And I think people are waking up to that.
So you studied economics at Stanford. Let's walk through that for our satillionaires who may be hearing about this for the first time. What are the COVID prints?
Well, so there was, I don't remember the exact number, but something on the order of $4 to $6 trillion added to, that was basically in the form of quantitative easing, right? In terms of, business backings, stimulus payments is the most obvious form. It was an incredible injection of fiat capital into the economy, which in hindsight, it was incredibly excessive. And it primarily went to, the top 10% of the population. And it led to that 9, 10, 11, 12% inflation that we saw in 2021, 2022, and 2023, and resulted in the hike in interest rates, which is then cascaded into a massive increase in the interest rate burden on the debt. And then, there's a whole bunch of second and third order effects that have resulted from that excessive stimulus package that happened during COVID. And that's not the first time that's happened. That's happened throughout the modern banking era, and it needs to happen to kind of correct for the inherent imbalances in the system. And I think it's part of the unsustainability of what's become basically a modern monetary theory led Fed, right? And we can go into modern monetary theory, but it's really the backbone of kind of the U.S. economy at this point.
Let's pretend for just a second you didn't go to Stanford, you didn't study economics,
Yeah.
right? And you were more like I was when I was in I think you said you're kind of in your late 20s, but like my mid 20s. I was living in Austin, Texas. I was working in a restaurant making, I don't remember, $15 an hour, something like that. And let's imagine that we have the COVID prints happen, right? While I'm just living my life, going to work every day, maybe going out at night, waking up, doing the same thing over and over. But in the back of my mind, like one day I want to have a family. Like I want to be a dad. I want to get married, and I have goals that I hope to achieve one day. What just happened to me?
Well, fundamentally, your entire economic base was just devalued significantly. I mean, it's a fairly simple concept, right? There's a, and the modern monetary theorists would reject this, but basically, if you have a certain amount of savings, right, in cash dollars in U.S. dollars, and there's a pie, and that pie grows by 20%, a pie that's been built up over 300 years grows by 20% in a single year, it's pretty obvious that means when there's more dollars for the same amount of stuff that people are buying, it's going to cost more dollars for any given thing that you want to buy, which is inflation, right? So it's just, I mean, it's, you don't have to get an economics degree at Stanford to see that, same amount of stuff, more money, any given dollar is worth less, right? And
So
that's what happened.
let me see if I can understand this as well, because it the printing of money during COVID made everything more expensive. And when you talk about quantitative easing, that's basically just another way to say printing money. I mean, that's
Exactly.
the $10 phrase that just covers up the fact that they're printing money and giving it to themselves, and apparently to the top 10 some odd percent of the country. I'm assuming either directly by giving them this money or by inflating the value of the assets that they hold, that we as Bitcoin dads or Bitcoin pre-dads don't have access to. So you have a pandemic where the rich get richer. The rest of us just kind of hang out and are either trying to use our stimulus checks to buy groceries, or maybe if you're a pre-dad and you haven't hit your like responsibility phase yet, you're blowing your stimmy checks on just whatever, a $250,000 Charizard from the original Pokemon set, because I know that card game went nuts.
Yeah.
Do you feel like the printing of money was a response to the pandemic, or was the pandemic an excuse for them to print the money they needed to paper over all the problems they had created previously?
Yeah, I mean, so that's, I agree with the second point, right? Where, we have these very short political lifespans where, there's a 2-year congressional election cycle, there's a 4-year presidential cycle, 6-year Senate cycle. And, in the short term, politically, it's always better to spend money, right? Because all of these promises that we have about, life getting better in the short term in a 2-year time span, you know, spending money makes that way easier, right? What's a better way to win people over than sending them a check in the mail, right? I mean, in a way, it's buying votes, right? Which happens in many countries, where like if you get a check in the mail and it was the Democrats that gave it to you in this case, you're probably more likely to vote for them, right? But you don't see the second and third order effects that are undermining the entire economic base. So there's a level of nuance there, and there's baked in incentives into the political system to do these very short term calculations, right? But if you zoom out, you see the system start to collapse under its own weight.
We need more Bitcoin dads in Washington D.C. who can
Yeah,
say to, when the American people say, "Can we eat out at Chick-fil-A tonight?" We say, "No, we have leftovers in the fridge.
Yeah.
We're going to do a leftover smorgasbord for this 2-year cycle. Okay, we're going to work through the stuff we already have. All right, because we can't be making all these short-term choices." It's really fascinating to hear you say that in the short term, as a politician, it is always superior to spend money, to print money, to buy votes, to choose that immediate gratification that leads to big fat problems over time. And you mentioned also the big beautiful bill, which is a hilarious name for a piece of serious legislation. It's like, I really still don't know if our guy is serious or if it's like a long-term satire that is genius. But
right.
you're saying the big beautiful bill is going to add to our country's deficit, which for all our satillionaires out there, when you're running your budget as a dad, as a member of your household, or maybe as a pre-dad like Dean, who's trying to get his money right to be able to hold down a lady, have some kids, pay for school, wedding, college, yada, yada, vacations, make it all happen. It means that America's budget is getting blown even further out of proportion. I think we're at like we're at 37 trillion in debt currently. Do you know how much the big, beautiful bill is going to add to our big, beautiful budget blowout over the coming decade? Because I think you said it's going to add over the next 10 years, right? Like, do you know just how much?
Well, I think the Congressional Budget Office, I don't want to get this wrong, but they estimated it was some on the order of like 6 to 10 trillion. That we should fact check that, but it's a little bit hard to pin down, because what they do is they factor in how much economic growth is generated and how much the tax base grows as a result of basically the stimulus in the bill, which is a very inexact science, right? And there's a tendency to exaggerate how much the economic base will grow as a result of the bill, because that makes it more politically viable. But yeah, in the form of tax cuts, I mean, the tax cuts are very significant. And so the tax base, the tax dollars generated in the country go down significantly and the deficit goes up. So it's definitely on the order of trillions, though, which at this point is just, apparently is like pennies to the US government.
So, Dean, if for anyone who's new here, listening to this and maybe hearing some of these things for the first time, what advice would you give to someone who, it's like crushing to think about. Like you start to add all this stuff up, and your hope for the future just kind of goes down and down and down. It feels a little hopeless. So what's the escape hatch? What advice would you give people out there?
Well, I would say, we live in a resilient country and we've been through a lot. If you study history, the Great Depression, there was a significant period of time where we thought we were basically done for as a country economically, right? And then there was this huge kind of reversal in the entire foundation of our economic system, right? In that case, it was the beginnings of what's modern monetary policy and monetary theory, which has worked for a certain period of time, but just kind of outgrew itself, essentially, in my opinion. But we have the capacity to change and to adopt radical new systems that are better fit to the times. So I think there's definitely optimism and evidence from the past that supports that optimism. And there's alternatives, right? I mean, Bitcoin is a fantastic alternative. There's still a tremendous amount of creativity and innovation in this country, right? I think a lot of politicians and economists are banking on the AI revolution to so dramatically increase per capita GDP that it kind of wipes away the deficit because the tax base explodes, right? And there's just kind of this, and I think that's a little bit fanciful. I don't see that necessarily happening.
Do you think that we as a country or as individual Americans, do we have what it takes to tighten our belts, save up for things before we buy them, and demand that our government does the same?
Do we have the right to do that?
No. Do you think we can? Do you think we have the
Yeah.
los cojones? You know what I mean? To like actually, because it's hard. Whenever you hear about austerity, it's like, oh, no, recent austerity measures were passed in Greece. You're like, oh, those Greek dudes, oof, that's gotta suck. You know what I mean? Like nobody likes that. We all like the free money. We like the handouts from the politicians. We like buying things on credit. It requires a whole shift into delaying your gratification. Do you think we have what it takes?
Um, I'm honestly pretty skeptical. So, I mean, I listen to Dave Ramsey, right? And, I like Ramsey. Caleb Hammer is another one, the Millennial Ramsey, right? And there's a huge proliferation of financial influencers that are all about getting out of debt, being financially responsible. And it just feels so ironic that there's all of this effort going into the individual balancing of the budget, while our government is just going crazy with debt. I mean, it just makes no sense to me, and it's incredibly frustrating. And I think we do have the capacity to do it, but this every sign points to us not doing it, right? We just cannot seem to prioritize the future. We can't seem to imagine, a world where we're actually spending what we're taking in as a government. And both parties, right? It's not one party or the other. It really is both parties. And there's just I don't see a short-term path to us balancing the budget unless there's just a radical change in the nature of government in the next 2-3 years, which is hard to imagine, honestly. So
In the next 2 to 3 years.
yeah, I mean, you see the way the debt's ballooning and the way the interest payments are ballooning. It's I think the time to sound the alarm bells was probably 5 years ago, and it's definitely time now. So, and I've heard Ray Dalio, right, the Bridgewater legend, right, say something similar, right? I think there's a lot of very smart people that know much more about this than I do that are saying the same thing. So
Let me back up for a second here because I heard something crazy that we haven't touched on yet. And I'll tell you a story to get to where I want to go. My daughter is wanting a backpack for 5th grade.
mm,
Now, she has a perfectly good backpack.
Carries books.
It's
Stuff.
a light green color. It has many zippers and pockets. It's not beat up. It's not busted around. And actually, she chose all of 4th grade to take this random Stitch backpack, like Lilo and Stitch backpack. That was completely unsuited for the purpose, had only one big pocket. All the junk is collecting at the bottom. I'm like, girl, this thing's as messy as your room. You're a freaking hoarder. You need to clean this thing out. You have a perfectly good backpack over here. Why don't you just use it? Well, this year she wants a brand new backpack. And I told her, I'll get you a brand new backpack for 6th grade because that's what we did for Lion. That's what you can get. So she says, all right, well, I'm going to save up and I'm going to buy the backpack myself. She's at $18 in allowance currently at this time. The backpack's $40. And she's looking at her weekly expected payouts and doing the math to determine whether she will have enough money to buy herself the backpack before school starts. And we did the math. And if she keeps our dog's bowls filled and makes her bed and keeps her room in some kind of order, she should have enough money just in time. Like right by that, the Sunday before school starts, she should have $43, which would cover hopefully the taxes. Because I told her, I was like, guess what? You saved up money in order to buy a backpack. And the in exchange for the privileges of buying something with your own money, you get to pay your government some taxes on that. She's like, she's getting her mind blown by sales tax. Like, what is even happening here?
she should come to Oregon. There's no sales tax. But
Ooh, Oregon. Shout out Oregon. Where are you at, Oregon? So she said, well, Dad, we're going to be going school shopping a little bit earlier than the Sunday directly before school starts. Is it okay if I buy the backpack and basically go into debt because I'm going to be good to make that money very shortly thereafter, right? And, there's a part of me that's like, Safadina Moose, mofo. Hard money standard, baby girl. Like, I'll see you when you got $40 plus tax, girl. I'll see you, right? And there's a part of me that's like, well, easy come, easy go. She's going to have the money. She's going to do her chores. It's going to be okay, right? And this is a great example in my mind where, a bank might say, look, dude, your life's good. Your job's steady. You're ready to go ahead and get into a house. You can't buy the whole thing. We'll help you out because we know you'll be able to pay it down over time. But it does get very unmanageable very quickly to behave this way because you just said that today's banks are loaning out money and they're simply banking on an AI revolution to catch up with all the credit that they're issuing and make a boom in the economy that will in fact be able to pay them back. That's a crazy bet.
yeah, I mean, but it's a necessary bet, right? I mean, it's necessary to justify the system, right? I mean, unless there's an incredible austerity measure that cuts the untouchable Social Security base, right, which is politically untouchable, right? Um, and there's a few. This is a whole separate topic, but I don't think it makes any sense for high income, high net worth individuals to be getting Social Security, right? I mean, Social Security it's a UBI for people over 65, right? And it's a huge, huge amount of our budget goes to Social Security. And so just examining that, really kind of radically opening our minds to what makes sense, what can we cut, right? Because, it's a crisis right now. And the AI revolution may or may not be coming to save us, right? And we have to be prepared for the fact that it may not, increase per capita GDP by 10% a year. Probably won't. I hope it does, but it probably won't. And so, I think there's just a lot of things that are politically nuclear right now that need to be not politically nuclear, right?
And what good is a 10% increase in my income if it comes with a 20% decrease in my ability to buy stuff with that increase,
Right,
right?
right.
Like,
It's real growth. It has to be real growth, right? Inflation adjusted growth.
uh,
It can't just be, surface level growth. Yeah.
wow. How wonderful to live in a country that has growth and real growth. That is
Yes.
insanity. That is
Yeah.
insanity. To me, that's like picking up a pack of Skittles at the checkout counter and it says no trans fats. Of course, there's no trans fats. It's just it's sugar.
Yeah.
It's just sugar. Like, what are you saying? Like, like the orange juice says made with real oranges. I mean, it better be.
Yeah.
It better be made with real oranges. We got growth. We got real growth. That's insane. So, can you explain, like I'm a Bitcoin dad, what is modern monetary theory?
So to go back to 1971, Richard Nixon was president. The U.S. had gotten a lot of debt from Vietnam, and we were still on the gold standard at that time. And what Richard Nixon did was he took us off the gold standard, right? So we no longer had to be able to redeem US dollars for a commensurate amount of gold. And what that allowed us to do is print as much money as we wanted, right? So no longer were dollars backed by any kind of underlying asset. They were just this free floating abstract thing that we made up, which is of course what they are, right? We made up dollars as a society and we can do whatever we want with them, right? That's the foundation. The philosophical foundation of modern monetary theory is money is made up, right? Money is a way of allocating energy and resources, and it makes sense for us to be able to do whatever we want with that to optimize the productivity of our society, right? And so what that's led to is this sense of we should be printing as much money as we need to at any time, with the caveat that we do not want runaway inflation, right? So the foundation of modern monetary theory is that go crazy, right? Print $100 trillion if that increases productivity, but you do have to watch the inflation rate. So in 1971, what happened in the 70s, if you know your economic history or you were alive then, is we had 10 or 11% inflation for 6 or 7 years. The Fed chair, Paul Volcker, raised interest rates to 20% and got the inflation under control, right? And we survived that initial kind of spasm of the birth of modern monetary theory. And so everyone thought we were cool at that point, right? It's like, okay, as long as we keep inflation relaxed, we can, print money, we can do whatever we want. And, I think we're getting to a point now where we're starting to see that the fundamental basis of our economic system off the gold standard post 1971 is flawed, right? And the debt has gotten out of control. We're no longer really able to control inflation the way that we would like. And so that's it, right?
So modern monetary theory is let's just print money so long as it doesn't get too bad.
That's it. Yeah. Yeah. I mean,
Bruh,
that's my definition. And that's our economic system, right? That's our economic system.
That's nonsensical. That's nonsensical. What can Bitcoin do to like help with this whole situation you've been describing across this episode?
Well, Bitcoin is a mathematically insured scarce asset, right? With a very strict issuance schedule. And, so there's a complete transparency of the supply, right? And it's more or less infinitely divisible, right? So there's no issues that arise from that scarcity in terms of, not people not being able to get a share of it if they want. I think people get stuck sometimes with the 21 million figure, right? But they don't realize that you can get, points to the, many decimal places, 0, 1 of a Bitcoin, right? So there's functionally an infinite supply in terms of its divisibility, but it's fixed in terms of its overall amount, right? And so that makes it a very potent way of securing value, of transferring value without, the fear of it being inflated away. That's the core value prop of Bitcoin, in my opinion.
That's really interesting. Finite supply, but effectively infinite since it can be divided.
Right.
Chris, what's your take on this whole landscape that Dean has described, where these individuals think that we can just print however much we want, and so long as it doesn't get too bad, but the debt's going up, we got a couple of years to try to reverse it. We might be able to, we might not be able to. Like, how does that make you feel?
Oh, I mean, it's what you're describing is an unmanageable system, and it makes me feel powerless. And but for Bitcoin, I would actually feel that way. But I discovered Bitcoin. I learned about Bitcoin, and Bitcoin helped to restore some of that, hope for the future in me. And I think, I feel I've taken microeconomics, in school. It just feels like, what was that? What was that? Why wasn't anyone questioning these things all along? And I think it's not because they weren't understood or known. It's because the power was centralized in the hands of a few, central bankers, banks in general. And the system, I just feel like it's been rigged for a long time. And that results in some pretty negative, kind of hopeless feelings when you think about the future. What kind of world are my kids going to inherit? I've got 3 of them.
Yeah. During my learning journey, like, there were moments I was listening to podcasts just like this one, and people were talking about how we're printing money basically inside a train that's like barreling toward a cliff. And they're predicting like a catastrophic moment, which to my way of thinking, like, turns us temporarily into Mad Max Fury Road. And like all of it breaks down, groceries break down, economies break down, like, and I just have to like determine how to like literally defend my family in like a zombie apocalypse type scenario.
Yeah.
And I remember feeling really uncomfortable in my guts and having to tell myself, look, Stuart, the way, feeling this way means it's time to take some kind of action. And like bug out bags, and like, do I need to start rewatching episodes of Doomsday Preppers where like, they're out there in Oregon and they're like, dude, we think Mount St. Helens is going to blow. And our plan is to bug out 10 miles, all that stuff. I have to kind of bring myself back into my own body and say, Stuart, what you can do is continue to mine fiat, continue to dollar cost average into Bitcoin, and have faith that this form of money that Satoshi created for each of us as a response to this insane system that we're in is going to be the solution, whether that happens slowly or whether that happens suddenly. Have you had any of those moments of crises yourself while studying this?
Oh, absolutely. Yeah. I think the more you look into it, the more you realize how unstable the current system is, right? And what happened in the 70s, where we had interest rates at 20% to bring inflation down, we can't do that anymore, right? You can't do that with a $37 trillion debt load. Because if interest rates are 20%, suddenly we can't cover interest rates. Our national budget isn't even enough to cover interest payments, let alone millions of government salaries and keeping the roads, from collapsing and bridges collapsing and everything else that the government does to keep our society functioning, right? So our options are becoming increasingly narrow in terms of how we can keep the economy on track, right? We backed ourselves into a corner. And a very human reaction to that is fear, right? What the hell are we going to do, right? Just become afraid. Now, one thing we can kind of take comfort in is we do live in the most economically productive country in the world, right? If the dollar collapses, the knock-on effects are going to be felt so much more acutely in other places first, right? So there's kind of this safety net that we've built up as a society, right? Which, that's still, I mean, that's still a horrific thing, right? But, there's a lot of kind of safety nets that still exist for us and privileges that still exist for us as Americans. So, basically it's going to be much worse for other people, right? We created this huge mess that's going to hurt other people first, which sucks. But, I think that's the reality.
Well, I
Sorry if that
hope.
was too dark, but yeah.
Yeah, no. Hey, look, dude. I hope that Bitcoin is Iron Man's nano gauntlet, and we'll just at the last second be like, "Ooh, boo," and like it's like, shoo, the universe is better now that Bitcoin is here. So tell us a little bit about your book.
Yeah. Yeah. So the book is a memoir. It's based on my time at Stanford in 2015 through 2020. That when I dropped out in 2017 to raise money for a crypto hedge fund and moved to Manhattan and invested in what were called ICOs, which Bitcoiners at the time would call coins. And basically, then in 2017, the Ethereum protocol um, was gaining traction, and you could launch any number of tokens on top of Ethereum, and people did it for all sorts of use cases, right? Some of them were completely stupid, some of them were more legitimate, and you had these massive 10,000, 100,000% gross in token valuations in a matter of months. And so there was this gold rush, right? And it all goes back to Bitcoin, right? Bitcoin created a way to develop and launch scarce digital assets. And there was all of these follow-on coins that resulted from that. And there's hundreds and hundreds of thousands of them today. And in 2017, that was the beginning of that gold rush for what's called altcoins. And I was investing in them. And predictably, I did super well while the market was going up. And then it all came crashing down. And so that was that's kind of the crash and burn narrative of the book, right? This
Mm.
insider account of basically recreating the existing system in crypto and the problems that came from that, right? We thought we were doing something different, but it turns out greed is still greed, right? And there's still the same things that come into play. And so, in a way, it is kind of a pro Bitcoin book because this whole time Bitcoin is chugging along, doing its thing, and all of these coins are are making all this noise around it, rising and falling, and Bitcoin still has the solid fundamentals. So
I think a lot of us Bitcoin dads are chugging along, doing our thing. And I wonder if your advice to them, if they're interested in this space and they're interested in saving and building generational wealth for their kids, should they just get started with Bitcoin like we recommend?
I mean, I think Bitcoin is a very smart and wise foundation of your digital asset portfolio. I would certainly recommend that would be the primary asset. And then, you have a little play money, right? There's legitimate stuff going on in the broader crypto ecosystem, but I think that's much more tied with the legacy financial system, right? Basically, there's not that much difference between kind of these small altcoins and meme stocks, right? I think there's a lot of the same factors where anytime there's a major stimulus, anytime there's a reduction in interest rates, these assets go up significantly. And if the US economy were to suffer, those assets would suffer in the same way that low cap equities would suffer, right? So they're highly correlated with the existing financial system in a way that Bitcoin is maybe less, right? Bitcoin still definitely is, but I think it has a legitimate hedge case and a legitimate kind of alternative narrative that makes it more robust against that. So Bitcoin is more of a hedge, more of a safety asset, whereas these altcoins are basically gambling, right? And
Would
if
you
you know the industry, you can make a lot of money very quickly, but it's not something that's going to be a hedge against the broader U.S. economy.
I think that this has been a great chat about Sats, Dean, and we just aren't going to fit all of it into a single conversation. We definitely touched on a lot of economics and history and math. But we do ask each of our guests if they'd be willing to come back on in 9 months to give us an update on their Bitcoin baby. Would you be willing to come back on in 9?
Hell yeah. Sounds great, guys. Yeah.
Because I'd like to get into I'd like to, explode the view on that memoir and hear what it was like to be a part of that, seemingly wealth generating event that might have turned into a big old crash and burn scenario. And we've had some, recovering crypto traders, quote unquote, come on the show, but I don't think they were operating at the heights that you were operating. So we'd love to unpack that on the next show that you're on.
Do we want to get pre-coiner pitch?
Sure. Yeah. So let's imagine that, before we recap, let's imagine that we've got someone listening and you got 30 seconds to get them interested in learning more about Bitcoin, maybe through the most valuable aspect to you. What are you going to say?
Well, I mean, I think there's no better hedge against the devaluing of the US dollar than a mathematically scarce, cryptographically secured cryptocurrency that's, multi-trillion market cap at this point, has been tested, is unbelievably secure and robust, and is as easy to buy as anything online, as an Amazon purchase, and easy to steward. So, throw some dollars in there and see what happens, right?
Yeah. Do you want safety and security?
Check.
Get some Bitcoin. Okay. Are you rewatching episodes of Doomsday Prepper? Get some Bitcoin.
Bitcoin's for you.
Okay. So let's recap here with Dean. Dean is in his mid-20s. He's out there in Oregon. He spent time at Stanford studying underneath professors who were pro-Bitcoin and pro-crypto to a certain extent as well. He said to himself, man, I missed my wealth creation moment. I missed the gold rush of 1849. I missed, what happened during World War II when we got real rich. I missed the dot-com. I'm adding in those examples. He mentioned the dot-com boom.
I did. Thanks for reminding me that I missed those too.
There's been other wealth creation moments in the past. And we may be on the precipice of one right now in the form of the AI boom. But this crypto revolution for you was your ticket to the top. You dropped out of Stanford. You started a hedge fund. You went to New York City. You got into these initial coin offerings. And, you learned that one of the basic things that would be a good idea to do is identify a scam or a rug pull, because you had high highs. And it looks like if we pick up your memoir, and what's the title of it again, Dean?
Yeah, it's God Money Lost and Found in the Crypto Wilderness. It's available Amazon, Barnes and Noble, audiobook, ebook, print.
And you open that sucker up and you can see there were also some very low lows, is what it sounds like.
Definitely.
And we talked about how the Great Depression, created an environment where we thought we might be done as a country, but modern monetary theory appeared to save us and get us up and out of there. But now, post-Vietnam, post-Nixon, it's creating a breakdown because we're simply printing money with abandon. And, the modern monetary theorists are supposed to be keeping inflation in check, but they ain't. So, for the dads out there providing for their families, it's going, their paycheck is going less and less far in their journey to provide and protect. And for all the pre-dads out there like you, Dean, you're trying to get a little nest egg together so that you can, make a little nest with some lady out there. And, every time you go collect some more pine straw and twigs, it makes less nest. You're like, what is happening here? Like, you're just on a treadmill. This is we talked about how we're kind of in a system that is not working. And the closer you look at it, the scarier it can get. But the closer you look at Bitcoin, the more you're like, you know what? This is, if not the solution, it's part of the solution, because politicians are always going to spend money in the short term to, attempt to govern, but ultimately several layers deep, they're kind of buying votes so that they can get reelected. And I got my career started in politics, and the amount of phone calls that someone in the House of Representatives makes each day to get money for their reelection it would make you would get sick. You would get sick to your stomach, because 90 to 99% of what someone in the House of Representatives does during their 2-year tenure is focus on getting reelected. They do almost no actual work as originally laid out by the founders of the country. It is ridiculous. So lots of economics, lots of history, lots of money here. And I think it's been a very, we might put this in the intermediate to advanced playlist because of what we covered here, but it's really important information. And for you Satillionaires, if you didn't fully get what Dean was trying to say, smash the subscribe button just so that you can be entered for your chance to win 2 million Satoshis when we reach 10,000 subscribers. And Dean is shaking his head yes, because he knows that's generational wealth. And then just keep watching the show, because you don't have to get it all at once, but you do need to push yourself to look at this stuff.
Keep coming back again and again and again.
Yeah. So let's take a little brain break here.
All right, Dean. So our founding sponsor here at Ithaca Hummus, yet again, 2 seasons in a row, is Ithaca Hummus. I mentioned the company at the beginning of the show because I am the founder and CEO. And today we've got the classic flavor. So Stuart and I are going to munch down on your behalf, and we'll send you some coupons for out there in Eugene, Oregon.
Cheers. I appreciate you.
Wow.
Looks good.
Great batch.
It's like jumping into a cold pool after you've mowed the lawn.
Yeah.
Well, that's a dad reference right there.
It's Absolutely. Refreshing. It's so refreshing. It's creamy.
It's wonderful.
And the classic, because you selected it. I'm a classic man, Dean.
I see that.
Vanilla ice cream is my favorite flavor. Chocolate chip cookie is my favorite cookie.
Oh, yeah.
Classic Ithaca hummus is my favorite, man. It's just good.
All right, Dean. Final step here. As a small token of our appreciation for you being here with us today, you get your choice between $50 and $50 in sats worth of Bitcoin, which I've calculated at today's exchange rate is $117,348 for 1 Bitcoin, which translates to 42,608 sats.
That sounds like generational wealth to me. I think I'm going to have to go with the sats.
Yeah.
Oh, wow.
Yes, it does. Yes, it does sound like generational wealth. And for you Satillionaires in the audience, the reason why it sounds like generational wealth is because it is. All right? Pocket money today is rocket money tomorrow. Ooh. So thank you for stacking the sats with us here today, Dean. You bring our show's scoreboard to 92 who have stacked the sats, along with 8 who need a little bit more time. So number 100, Dean, outstanding way to kick off season 2. Dean's book, as he said earlier, is available on Amazon.com and other booksellers. We will have all of that information for our Satillionaires in the show notes below. You can also find information to sponsor our show if you want to join the ranks of Ithaca Hummus and the Pearl Collective. You can support our show by coming on it and by, it's all in the show notes. You'll see. So thanks so much for watching here today, Satillionaires. Dean, thanks for coming on the show. Remember, Sat Chats is for educational purposes only and should not be construed as financial advice. Also, our guests' views are their own. We'll see you on the next one. Bye-bye.
Thank you.